Hello, traders. It is April 1st, Wednesday evening, and that means it's time for our weekly swing trading video. Still a lot of market volatility. You can see how the market sold off last week. We were able to get some really nice naked put rights off on Wednesday morning. We did the video a day early. We'll take a look at those trades, but you can see how the market showed some strength. Everything was looking really good, and here we go. Now the market's starting to pull back in again. I would not be at all surprised if the low from last Monday was tested, and I believe we hit an intraday low somewhere in the 218 level on the SPY. We can zoom out, take a look at that monthly chart, see if there any signs of support. And yes, we have the 100-month moving average that we would lean on somewhere around that 216 level. You can see how we barely came down, rallied just before we got to it. I wouldn't be surprised if we see that level again. We've got still a lot of very, very heavy news this week. We've got the number of deaths increasing in the U.S. The new cases of coronavirus continue to escalate. That is in part because we're starting to test for it. So don't look at that as the spread rate. We're still trying to establish that base. There are still lots of good news that's coming out regarding the virus, that being that Abbott has a test kit that'll allow them to test within 5 to 15 minutes. That can be used at airports, a whole different variety of applications. People coming into the hospital, they can be tested outside right away before they're admitted. We still have a lot of issues with protective equipment for healthcare professionals, so hopefully those supply issues will be resolved. I believe that we've got another 10 days or so before we see the coronavirus peak and the number of new cases start to decelerate. But this is not a time to breathe easy. I still think that the news is going to be very, very heavy for a couple of weeks, and then we'll start to see some slivers of light. And we'll also start to see some very heavy, heavy economic data coming through. Initial jobless claims. The unemployment report Friday, forget about it. It's going to be way understated. They can't even keep up with unemployment claims right now. Last week we saw 3.2 million people file for unemployment, and the only reason it wasn't higher was because the website crashed. They couldn't even process the applications fast enough. So the $1,200 per person check that's going to be coming in the form of Fed stimulus will be welcome relief for a lot of people. We've got rents that need to be paid by individuals and also leases that need to be paid for companies. And if you look at the parking lots and the streets, they're empty. This is going to be a huge, huge economic hit. And right now, the only thing the market's really focused on is the coronavirus and getting past that. The reparations, the economic recovery, we can deal with once we get rid of this dang virus. So we're going to continue to see some weakness as long as this news is pending. Now, we need to make sure that there aren't any credit issues, and the Fed has done everything that it can. It's got the $2 trillion stimulus package. Market was so about that only because they expected it to happen. There's another $4 trillion behind it, says Treasury Secretary Mnuchin. That is a huge war chest. They're talking about a fiscal spending program of $2 trillion on infrastructure. So there are a lot of things being bandied about to get the economy back on track right now. Got to get through the virus. So we can expect some more weakness over the course of the next 2 to 3 weeks. And that is going to bring the market down. So we still have to play it safe, and we've got to distance ourselves from the action. But that's getting a little bit harder to do. Remember, option implied volatility spiking way up here at 75. Look where they are right now, 50. They've lost 50% of their value in the course of the last 2 weeks. So that's a big drop, and that means that we're having to go closer to the money to find those premiums that we collected. But there are still some good plays out there. We're only going to be trying to generate a 10% return on our plays in the course of the next 2 to 3 weeks. I've got one trade that's going to actually span about 6 weeks. So That's our objective, is just to generate some income while all this volatility plays out. Now, I know there are a lot of people who are out there calling this a market bottom, and there are others who are saying, oh, this thing's going to tank. There's no way this thing's going to bounce. So what that basically tells us is that there's a lot of volatility that's going to come into play because there are people on both sides of that equation. And what that means to me is that this is going to be a bottoming process. Test one, test two, test three. Ideally, we start to see higher lows with each one of these tests. And ideally, the news gets a little bit lighter with each one of these tests. I believe that the sell off that we see this time around probably won't quite get down to that 218 level before we find support. We'll see if I'm right, but I believe that as this bottoming process unfolds, may take a couple of months or so, eventually there is going to be a good call buying opportunity. And I know what to look for, and I'll be ready for it. But right now, we are not swinging for the fence. We're trying to generate income on a swing trading basis. We're trying to focus on day trading. That's been working really, really well without taking any overnight risk. So, in terms of the whole portfolio, yes, we want to start generating some cash, some swing trading cash. We want to get that capital deployed. But for the more speculative types of trades, we want to stick with our day trades. So let's take a look at what we've got on deck here. Now I'm going to start off with some trades that we did 2 weeks ago, and we sold Google out of the money puts. Look at the stock is at $1,100. We sold the $650 puts for $6. I think those are very safely out of the money. The stock would have to fall 50% in the next 2 weeks for us to be in trouble on that trade. Now, we're putting up a lot of margin for it. Pete, I don't have a large account. Okay, maybe start looking at taking profits on some of these positions and buying them back in. If you're happy with the position and what it's doing, leave it on. You don't have to do the trades from this week. It's really up to you if you are starting to deploy all of your capital. But that's in really nice shape. Facebook, we sold the $100 puts, April 17th expiration. The stock is at $160. That stock would have to lose more than a third of its value for us to get assigned on this one. So those options are dwindling at a very, very rapid pace. A lot of profit in that trade also. Cisco, I can't recall which options we sold on it. I just know that the stock rallied from when we sold them. I think we're in the low 20s on this one. Got to be a lot of profit in that one as well. And finally, Twitter was another one that we sold puts on. This one is the only one that might actually be a little bit more precarious, but I think we're short the 1750 puts. Those are still way out of the money. Twitter is coming down. It's a little bit more of a volatile stock. And on some of these, like Twitter, I actually wouldn't mind owning the stock. So if you've got profits, I would look at stocks where you can take profits. If the stock has moved against us a little bit, there's not a lot of profit in it, leave it on. I like these trades. I think they're going to do really well. So we're going to go in and take a look. We'll click on trade. And then we're going to go in and take a look at our staged orders because this is where we can see this week's trades. And it's real easy for you to submit them to your brokerage firm. They're all GTC orders. Once you submit them, though, I would go in and adjust the quantity to the size that you'd like to trade. And perhaps you want to adjust the price as well. So it's a little bit easier with the credit spreads when you route them Wednesday evenings because I'm setting the price so that you cannot get filled. So you'd have to adjust the price during the day on Thursday. But for these naked puts, I kind of want to keep the price out there because it's not obvious what our initial credit was that we were looking to receive on it. So let's first go through and take a look at some of the positions that we have from last week. Now, we were able to get in on Cirrus, ITT, SWKS, and Yelp. And we've got all the strike prices here. So I'm going to move this off screen. And then I'll just tell you what our short strike price is. These are all expiring April 17th. CRUS, really nice one. There we are short the $45 put. Look, the low is at 50. Look at how high that stock is right now. So we are way down here. We got plenty of room. We got $15 worth of room. The stock could drop 25%. We'd still be okay. And we got 80 cents for those. We only have 2 weeks left till expiration. So Cirrus, really nice shape. ITT, there we're short the April 17 $35 puts. The stock is at $43. Really nice shape. Got 80 cents for those. So you can see that we're even below that candle right in there at the $36 level. ITT looks excellent. SWKS, that's a really nice trade. There we are short the April 17 $70 puts. So way down here at the low with 2 weeks left to go. We've got about 12 and a half points of cushion on that one. So nice shape. YELP was the final one that we put on last Tuesday. There we're short the April 15 puts. Stocks at 17. So we got a little bit of breathing room on this. But again, I don't mind getting assigned on these. I'd kind of prefer to get assigned on these. We've got a lot of, in a course of another week, we'll be that much closer to expiration and we'll be that much more time decay coming out of these option positions. So especially for the trades that we put on 2 weeks ago, if you need to release some margin, that's how I would play it. So let's take a look at what we have on deck this week. I didn't have to really go through any hardcore option stalker searches because I knew where I wanted to be. I want to be safe. You've seen me talk about VLO. I think that refineries are an absolute printing press. So I want to sell out of the money naked puts. I want to try and buy these stocks. They're not as sensitive to the price of oil because they really operate on the margin that they create between the price of gasoline and the price of oil, and that's their refining margin. As I pointed out in a video that I posted a few days ago, there haven't been many refineries built in the last 20 years, only a handful of them. So the ones that are out there are operating and they have basically a printing press. They just keep making money. Sometimes the spread is wider between oil and the price of gasoline. Sometimes it contracts. Sometimes they have maintenance costs in there. But overall, they're going to continue to operate with those profit margins because there aren't new refineries coming online. It's a very, very solid business. And people are going to start driving again as soon as the lockdown ends. So we'll go right into Memorial season with people driving. They may not be doing air travel as much, but I think they're going to be in their cars traveling in the States. So it won't take long for that to come back. And with oil prices being so low, I believe that even though gasoline prices are low, I think those profit margins will still be relatively healthy. I'm looking to try and get assigned on these stocks so that long term we can sell some calls against them when we buy the stock. So what I'd like to do on VLO is I want to sell the April 17 $30 put. And you can see the stock would have to drop below where it's been on the, well, it was a week ago Monday when the market made a low. So it would have to take out this low for us to get assigned. So I'm going to show you that trade. It's right here. It's the VLO, sell one of the April 17 $30 puts. We're going to try and get 60 cents for it. So we'll go in here. We'll take a look at what it looks like on the option chain. Now this trade doesn't have a long life. And we'll go into the $30 strike price and you can see the $30 puts are 32 cents bid, offered at 65 cents. We want to try and get 60 cents for it. Well, why? Because if we have to put up margin on this particular trade, then we put up 20% of the strike price. That's going to be roughly $6. If we can bring in 60 cents, that's a 10% return in 2 weeks. I am all over that. That is a nice, healthy return. And you can see VLO did pull back. So if it gets another little bit of a pullback tomorrow or Friday on a horrendous jobs report or additional selling tomorrow, yes, we easily could see that stock drop. We just need a little bit of a push lower. I would say with the $30 strike and the stock at 41, we'd probably need to see it down to about 39 tomorrow and maybe 38 the next day to get that 60 cents, but it's definitely in range. If we don't get filled, no big deal. We've got some really good trades on right now, and that just means that we don't have to close those down. This is a time to really try and play it safe. So, VLO is the first trade that I like. I also like Pepsi. Pepsi has a little bit of exposure to the soft drink side, but right now everybody is shopping. They're not going out to eat, so they're buying soda, they're buying snack foods, and Pepsi's just a solid company. We're going to look at those April 17s. I'm going to go into the staged order screen so you can see that order. We're going to sell the Pepsi. I've got the April 24s here for a $1 credit. So let me bring this off screen here for a second. I want to go into Pepsi. And I want to make sure, see, if I hover over the E, I can see that earnings are on April 28th. So I was able to go out just a little bit further in time and try and get a little bit more premium. So this is an April 24th expiration, and we're going to try and bring up that trade screen. And Pepsi, we've got to go into the April 24s, and we're going to go down to the $100 strike price. And here we're going to try and bring in, I believe it was $1 for that put. Yes, we're selling the Pepsi April 24 $100 put. We're trying to get $1 for that. And we're going to take a look at that price currently, and we've got 68 cents bid offered at $1.64. I think $1 is pretty doable right here, right now. We get any kind of pullback in that stock, we should be filled at $1. So in this particular instance, you might be thinking, well, gosh, Pete, I got to put up almost 20 bucks for that trade right there. If I take 10% of the strike price, it's $10. 20% would be $20. I'm bringing in $1. That's only a 5% return. I thought we were trying for 10%. That's 5% return, but we only have the position on for about 2.5 weeks. So very, very short trade duration. So that makes it more attractive for us. We want to stay inside of those earnings dates, folks. Whenever you're selling put credit spreads or call spreads, any kind of trade, actually, make sure that you check the earnings date because we are coming up on earnings. Quick note on earnings. Our earnings searches that we have are awesome. I can't wait for earnings season to start in another 3 weeks, actually 2 weeks, because as soon as these companies start reporting earnings, we're going to be going back in and looking for stocks that performed well after the number. And then we'll have a whole other tier of stocks that we can start selling put credit spreads on or out of the money naked puts on. We got to really wait to see what the market does, but that's going to give us lots of new trade opportunities. So that's one of the reasons I wanted to stay within that April 17th expiration period, was so that we had a lot of trades expiring and a lot of cash available to evaluate some of the future trades that we're going to be doing. But back to Pepsi. So we're looking to get $1 for that March 24th $100 put. I really like this trade. Look, Pepsi would have to take out the low. It's been holding up really, really well. It's a flight to safety stock. Everybody wants to be in the consumer staple goods right now, especially the food stocks, which brings me to one of my next plays. I'm going to go back into staged orders, and I'm going to be looking at Walmart. We're going to be selling the May 15 $100 put, and we're looking to get $2.20 for that. So Walmart, May 15, $100 put, $2.20. So go in here, take a look at Walmart, and these options are still way out of whack. The bid-ask spread on most of these is a mile wide. So we're going to take a look at the $100 put. You can see that they're $215 bid, offered at $236 right here, right now, today. I believe you're going to be able to get 220 on this tomorrow on the open. So if there were any stock that you're looking to hold off on a little bit, this might be one that you can hold off on simply because we've got 6 weeks to get this trade off. But I wouldn't wait too long. I would only wait long enough to see if the market starts to pull in tomorrow. And if it does start to drop tomorrow, then you'll be able to maybe hold off for a little bit better price. But if we take a look at it, so again, here we've got to put up 20 bucks. If we're bringing in $2.20, that's going to generate a 10% return in about 6 weeks. That's a fantastic return. And we're way the heck out of the money. So let's take a look at Walmart and see how far out of the money we are. You can see the stock is at 114, and this is what Walmart tends to do most of the time. So this is pre-coronavirus. It doesn't go very far very fast. It flatlines. So doesn't typically make big moves, and because they have all the goods that people need right now, they've stayed open. They've got a lot of food. They have basic necessities, paper goods, clothing, that type of thing. Walmart's still open for business. I think that they're going to be relatively unaffected by the shutdown because people are still going into those stores. They're buying more when they go in there. They're not making as many frequent trips to the store, but I think they're going to be okay through all of this. And we're way the heck down at the $100 strike price. So I feel really good about that. I don't have any issue owning Walmart at $100 under the current circumstances. Then the final trade that I've got for you is another food related stock. It's KR. It's performed well. One of you actually asked me about this today, and I had to think about it. And I thought, I could see doing a shorter term put right on KR. Wouldn't want to be in it for a super long time because it's a tough business. It's a low margin business. But yeah, let's take a look at KR. We'll go into the staged orders. And so we want to sell one KR April 17, $28 put. We're looking to bring in 56 cents for it. So let's take a look at KR and we'll go to that chart. And you can see here that the 100-day moving average is at 28.75, so we'd be able to lean on that. We're actually leaning on this low price right in here that was established last week. Another stock that goes nowhere fast. Just a lot of compression. This is the kind of stock we want to be in. This is the kind of put that we want to sell. We don't have to worry about the rug being pulled out from underneath us. So we're going to be selling that KR $28 put. These are the April 17s, and we're looking to bring in 56 cents. Now, if we do that, we're going to generate a 10% return in 2.5 weeks, but we're going to have to go pretty close to the money. You can see the stock is at 30.50, so it doesn't have to travel far for it to be in trouble, but you can also see that the stock doesn't go very far very fast. It's had some herky-jerky movement in here, and it's through earnings, so we don't have to worry about earnings season at all either. It's already behind us, and let's go in. We'll take a look at those April 17s on KR and the $28 puts. You can see they closed 48 cents bid, offered at 60. We're trying to get 56 cents for them. So I think that's also very doable. We'll go into that staged order screen one more time. And I'm going to actually leave these trades up there because we've got the date here. So I would not enter any of these trades, although you could click the submit there. These are all out of range. I would say give these a day or two to try and get into the trade. If we've got 6 weeks like Walmart before expiration, that one you can keep trying for a little bit longer, but most of these, April 17th is coming up pretty quick, so we got to get in this trade Thursday or Friday. If not, just cancel it. Because if we get filled next week, that means the stock has really had to come in, and we probably don't want to be in the trade at that point because time decay will have already be working in our favor, and that means that the stock is closer to the money and it's probably gone through some support levels. So those are the trades for this week. Again, this is a time when we really want to play it nice and careful. We want to make sure that from a swing trading standpoint, we're not losing any sleep at night. We're deploying our cash. We're trying to generate a nice income. Somewhere in the neighborhood of 10% is what we would like to generate through the course of April. And I mean, if you look at 10%, that's 120% a year. Who's complaining about that? With this type of market volatility, you can't be guessing day in and day out. Yep, that's it. We're off to the races. Buy calls. Yeah, charge. Here we go. Woo. No. Same thing on the put side. This is a time when option implied volatilities are going to get crushed, and we're going to start seeing the market come into a range eventually. So if you're swing trading, you do not want to be long premium. I cannot say this enough. If you are a call buyer or a put buyer, you are going to lose money. And if you don't know how to do credit spreads and sell premium, you're going to be on the short end of this stick. I promise you that. Now, if you're day trading, you don't want to be trading options either, but you want to be trading the underlying stock. The option bid-ask spreads are too wide. The slippage is too great for you to be able to get in and out of a position. But when you trade the underlying stock, it's infinitely more liquid. That's what we've been doing. We've been doing it quite successfully. The last couple of days have been a little bit more difficult, but man, we had a really good run last week. We made some serious money. Markets coming in, find support, then we'll have another opportunity to catch another leg higher and do well again. So that's the video for today. Deep breath. I think another week, 10 days, we start seeing a little bit of light at the end of the tunnel. Definitely within the next 2-3 weeks, everything starts to brighten up. People start to get more encouraged as the virus spread starts to decelerate. And then I think you're going to see the first signs of a market bid get established. But we still have a lot of work to do this summer to get this economy back on its feet. Thanks so much. By the way, if you're watching this video on YouTube, I release it on Saturday. I release it to members on Wednesday night. So please go back and take a look at each one of these picks. You have the benefit of hindsight. You can go back and see 3 days after the fact how these picks did. Thank you so much. Have a good night. We'll see you in the chat room tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.